Alrighty, guys. I'm going to start off just a little bit earlier, since I need to get some stuff going. But look at this market. Late in the session, little rally going on. So this morning we started off range bound with a bias to the upside. Looking to buy weakness, and really we got nothing happening until late in the session here, like at almost like at 2 o'clock hour. Remember our 2 o'clock hour? So it sounds like it's going to happen. Directional change usually happens and it starts in this time frame. And we got some a big fake out on the downside, ran right into the session lows in the 62.25s. This is not tradable. I mean, it's if you try to trade that, I'm not sure exactly how you would do that, but it happened too quick, too sudden, too quick, and then ran right back up again. Then he just went sideways, an attempt to take it lower. Now, if you were aggressive here on the short side, you could potentially try to start a scaling dynamic here, but it's a little bit too early. I would have been waiting for them to come a little bit lower before I did that, but. So this was difficult to trade if you were trying to get on this one. But looking to buy weakness is good up to like the London close, and since they were holding in a range, we just stayed range bound, looking for potential directional changes. Nothing really stuck out right now, though. However, nice little rally at the end. This is stuff like that comes out of nowhere. Very difficult to trade because I mean, you've been sitting here sideways for most of the day, and then suddenly you have a big rally like this. It just takes you by surprise. But at this point, we're right up here against resistance at 62.50. So at this point, if anything, you would look for a short setup here against the resistance. No rush to get short here, by the way. You had to look for a decent setup and a trigger. And if they can't take it higher, we may see a nice little back off here, the back here towards the mean at least. But at this point, I would still favor the long side. I would not be very aggressive on the short side at all. But we are up against resistance, and this could be a potential setup. So there we have it. So on news this morning, what you had just one piece of news, and that was about it. And as I said, I've been out this morning and doing a little procedure thing and basically getting back into it here. So news for tomorrow, July 1st. This is the last trading day of June, by the way, and the quarter. Not to forget, this is the last trading day of the quarter too. Maybe that is why it's rallying. So last trading day of the quarter, last trading day of the month, and tomorrow we're starting July 1st. Uh, News for tomorrow, we had Jerome Powell speaking or testifying at 9:30. 9:45, we get PMI manufacturing, ISM at 10, construction spending and jolts at 10. So 9:45 and 10 we have news. 9:30 Powell is saying something, so he has to pay attention to that. Um, Wednesday looks pretty anemic on news front, but then we have on Thursday a big news day coming up at 8:30 and 9:45 and 10. Now remember, July 3rd, as far as I can see on the CME market data, is just a half a day. So all this news coming out, and then they close at 1 o'clock, early close. They reopen for July 4th, and there's another half day. So the two half days on the equities. Gold energies are trading until like the regular close on Thursday. So just be aware of that. But anyway, so we'll see how this whole thing shakes out. Right now, I would still stay range bound bias. It would still be on the long side going into tomorrow. So that's where we have it. That's where we are. Looking at the Nasdaq and the bond market trading higher. So I don't know what that is all about, but nice little run to the upside. Yields coming down. This is not the flight to safety. This is just the bonds trading higher, and that usually would mean that if yield comes down like this, is a pretty good sign for at least the small caps, small and mid caps. It needs to borrow money, so we have that. So I would stay on the long side on the bonds as long as they hold above the 15, 8 to 10. Stay on the long side, see how far they can take it. And yes, on the bond market, we have taken out this edge right now, right? This low volume area has been taken out, and we are heading up towards this 1624 up to the 1712s, this whole area of attraction. And there's a small attractor at 1624.25, another attractor at 1716 to 18. So that's where we're heading right now on the bonds. Let's see if that's for real or not. We'll see if we get some continuation tomorrow. On the Nasdaq, also a pretty nice run up here towards the end of the trading day, range bound. Nice. This is kind of the retest failure you're looking for. I mean, Nasdaq is better that way. It just it moves a little bit more, and it's a little bit more volatile. But look at the beautiful that setup is, right? So you run it down here. This one, as I said on the ES, this was not tradable. But on the ES, this retest didn't even make it halfway down here, though. Not a little bit more than halfway, but not enough for me to want to trade it as a retest failure. Nasdaq, however, run it down here, comes back up and attempt to take it lower, running the stops below the obvious, and then reverses. So at this point, getting long at the 28 to 800s, you still had to have you stop outside that rotation. So if you don't want to get in there and give up all that trade location, you had to kind of wait for a little pullback here. You didn't get much of it, so that could have faked you out. But that's a nice retest failure. So getting in aggressively here at the 800, you may have to fade heat down to the 780s, like 20 ticks of 20 points of heat. But with the 100 tick stop, you would still be outside that rotation with your stop. And that the expectation on that would be back to the mean, right? That would you be expected trade 840s. And if you have staying power and you can sit through it, maybe you'll be able to capture the rest of it, but that's no guarantee of that one. Once you're taking that trade, the expectation is rotation back to the mean, especially a range-bound trading day. So if you don't get out at the mean, if you get that far, chances are it may bounce right back down again and shake you out of that trade. So moves like this after the fact are easy to call, but you had to trade what you see, and by the time you're back to the mean, you have no idea this is going to happen. So that's kind of the dynamic of it. So starting off on the long side on the Nasdaq as well, looking to buy weakness down to the 22 780 to 800 for rotations back up. Finally, looking at bond, oil, gold, and oil. Let me see, back to gold and oil. And both of these two are range bound. So oil haven't moved at all. That's range bound, hasn't moved, haven't traded that bond. There's just nothing going on there. So range bound trading on oil at this point. And then on gold, nice move to the upside. So gold looks to me like it's getting ready to retrace back up to that 33.40. So I would be trading it as such. I would look to buy weakness now down to this area, the 33 8 to 10s. And if they trade below that 8 to 10, I would go back range bound. But if they hold above this one, I would stay on the long side and see if they can run it up here to the 33.40s again. All right, so that's where we have it. So last trading day of June, last trading day of the quarter. And we have got a nice rally to cap it off. And starting from the long side on gold, range-bound oil, both ES and Nasdaq, we're starting off from the long side at least for now. And let's see how it goes. Alrighty, guys, we'll leave it there. We'll wrap it, and I'll see you guys back bright and early in the morning. You guys have a good evening. All right, later.